Good morning, Roger here from Hermatics. I'm going to do a reading of our latest document. Hermatics overview to white labelled homes brands for the BTR market. The UK housing market has experienced significant changes in recent years, with the rise of modern methods of construction, MMC, supported by institutional investors, and self-build custom homes, SBCH, advocated for by the Bacon Review and Building Society Association. The build-to-rent market has also grown rapidly since 2016 and is expected to remain strong post-pandemic due to its low risk for institutional investors. However, challenges such as the collapse of companies like Katerra and the affordable housing crisis must be addressed. Hermatics aims to address these challenges by providing affordable homes for purchase, either wholesale or direct to owner-occupiers, through its unique approach to modern methods of construction and customer financing. The company's focus on profitability and best-in-class value proposition for customers sets it apart from competitors and positions it as a leader in the delivery of affordable housing solutions, employing BIM, Building Information Management, MMC, Modern Methods of Construction, and DFMA, Design for Manufacture and Assembly. The BTR and institutional housing market have also gained momentum in recent years. The BTR sector, housing association and local authority markets represent wholesale fleet buyers who can white label the Hermatics brands to their own living brands. The build-to-rent and institutional housing market in the UK has seen significant growth in recent years, driven by a rising demand for high-quality rental properties and increased investment from institutional investors. The BTR model offers purpose-built rental properties that can cater to the needs of renters, while institutional housing provides stable income streams for investors. Despite challenges posed by the COVID-19 pandemic, the BTR market is expected to continue its growth trajectory. The rise of modern methods of construction and self-build and custom homes present innovative solutions to meet the demand for affordable and sustainable housing. However, financialization of housing production and the affordable housing crisis require policy interventions to ensure sustainable financial models that prioritize affordability for the consuming tenant or owner-occupier. Overall, a granular approach to investing is necessary to navigate the complex and multifaceted regional housing markets successfully. The Homatics dashboard offers a unique solution to the problem of slow build-out rates on large housing sites by decoupling affordable build-out rates from house builders' absorption rate concerns. The app provides a white-label public policy tool for local authorities and central government. This allows all conditioned affordable housing provision to meet existing demand, represented by housing association and local authority waiting lists, and private sale homes offered at 70% of open market value. The app's differentiation capabilities enable the addressing of differing markets, accelerating the overall rate of build-out. The importance of sales outlets in a market without help to buy is also highlighted, with the need for local planning authorities and house builders to work together to increase the number of sites gaining planning consent. By doing so, the housing market can improve choice for buyers and contribute to an overall increase in new homes delivery. Link to full context of dashboard summary prepared for Lichfields. Contents. Introduction. Brief overview of the current state of the UK housing market. Importance of addressing the challenges facing the industry. 2. Modern methods of construction, MMC. Definition and benefits of MMC. Government policies and initiatives supporting MMC. Investment from institutional investors in MMC. 3. Self-build and custom homes, SBCH. Definition and benefits of SBCH. government initiatives supporting SBCH, impact of SBCH on the housing market. 4. Build to rent, BTR. Definition and benefits of BTR, key players in the BTR market, impact of COVID-19 on the BTR market. 5. Challenges facing the housing market, collapse of companies like Katerra, financialization of housing production and its negative effects, affordable housing crisis and its solutions. 6. Conclusion, outlook for the UK housing market, need for continued investment and policy interventions to address challenges and support growth in the industry. Part 2. Hermatics Dashboard and Hermatics Strategic Land. Part 2 shows how our DFMA single-family home solution can be delivered at scale as part of a collaborative and diverse large site master plan with participation at all scales of developer promoters, general contractors and subcontractors at local, regional and national scales using cross-market data contextualization. Summary. 89% want to own, but only 62.5% do. The UK housing market has undergone significant changes in recent years, driven by a range of policy initiatives and market forces. The rise of modern methods of construction, MMC, and self-build and custom homes, SBCH, have been supported by investment from institutional investors, such as Aviva Capital Partners and Goldman Sachs. These developments have the potential to improve build quality, reduce costs and environmental impact, and speed up the delivery of new homes. The build-to-rent market has also been one of the fastest growing segments in the UK's property market since 2016. Despite the challenges posed by the COVID-19 pandemic, the BTR market is expected to remain a strong trend post-pandemic, viewed as a safe haven for institutional investors due to its low risk compared to other investments. However, the housing market is not without its challenges. The collapse of companies like Katerra highlights the need for sustainable financial models and careful consideration of connections to other companies. The affordable housing crisis is another issue that must be addressed, with a focus on demand planning, building a solid sales pipeline, and prioritizing customer-led projects. Target audience including supply chain relationships. The financialization of housing production has led to a shift in priorities for house builders, from building more homes to maximizing profits for shareholders. Share buybacks, dividend payments, and land speculation are common practices that contribute to the unaffordability of housing in the UK. Policy interventions are needed to address the negative effects of financialization on housing production. The BTR market has attracted some of the biggest players in the industry, including Legal & General, Quintain, Greystar, Goldman Sachs, and M&G. These companies have invested considerable sums in BTR developments across the UK, with a focus on providing quality rental accommodation that meets the needs of today's tenants. Fundamentally, the question of what tenants want, faced with what is on offer, is not addressed. 89% want to own, but only 62.5% do. Overall, a granular approach to investing and a focus on sustainable financial models and customer-led projects can help address some of the challenges facing the UK housing industry. Policy interventions are also needed to address the negative effects of financialization on housing production and affordability. The rise of MMC, SBCH and BTR represents an important shift in the UK housing market, with potential benefits for both buyers and renters alike. Hermatics aims to participate as both a developer and supply chain enabler in the £5 billion per annum BTR market, integrating across both the rental and owner-occupation sectors, addressing the Letwin Review conclusion on housing delivery that, quote, The Letwin Review has reached the important conclusion that increased housing diversity will speed up building out rates on large sites. This is likely to have the added benefit of improving design quality and potentially creating more attractive places. Letwin suggests specific levels of greater housing diversification can be funded through land value capture. However, the government has said it is more focused on evolving the existing system of developer contributions, Section 106, but that it will keep reviewing the need for further interventions to support housing diversification and faster build out. This further suggests the forthcoming planning guidance is more likely to act as encouragement aimed at local authorities and Homes England to identify suitable large sites with opportunities for further diversification. The Hermatics approach facilitates this diverse approach to tenure with a focus on profitability and robust market fundamentals. The company is a bespoke solution to the specific problem of undersupply in both the affordable homes and retirement homes markets. Hermatics is a fully ESG compliant, carbon neutral, off-site building manufacture system based on the Verimatics DFMA closed panel off-site system. Link to Hermetic's short deck. Introduction. The housing crisis has been a topic of discussion for the past 10 years, and modern methods of construction have been presented as a solution to the various issues plaguing the industry. Off-site manufacture is not a new concept, but it has been gaining traction in recent years due to its potential to address labour shortages, land banking, planning system problems, and NIMBYism. Hermatics, through extensive research over the past 3.5 years, has identified the hottest sectors in both single and multi-family real estate in the United Kingdom market over the coming decade, namely the senior living and budget housing sectors, with delivery vectors from build to rent through to self-build franchise models. The company's roadmap involves revolutionizing new home sales in the same way Direct Line revolutionized the insurance market in the 80s. Hermatics has developed a new way of building, selling, financing, and renting homes in the affordable and senior sector. The marketing opportunities for industrial produced residential property and packaged mortgage finance open up the direct sales cable online marketing space. The company has developed its paradigm defining approach with Irving Martin, the top direct response TV producer in Europe. Hermatics RLD Limited acts as project manager and brand manager for targeted niche market sectors. The company leads the consultancy and sales and marketing teams, while Verimatics marshals supply chain. Hermatics is the mother brand to a range of designs of product lines, including Stylmatics, Loftmatics, Silvermatics, Ladymatics, and Housematics. Modern methods of construction. How Hermatics is revolutionizing affordable housing. Affordable housing has been a pressing issue in the UK for decades, with traditional methods of provision failing to meet the needs of a growing population. Enter Hermatics, a company that has developed a unique approach to construction that aims to provide affordable homes for purchase to those who have been unable to do so through traditional means. Hermatics' approach is based on the principles of modern methods of construction, which involve off-site and modular building techniques. The company has studied the successes and failures of other MMC companies, such as Katerra, ACOM, Roger Sturck Harbour and Partners, Legal and General Modular, and Ilke Homes, and has developed a model that is based on real-world data generated through over 15 years of experience. At the heart of Hermatics' model is the Imagineering Dashboard, a paradigm-defining tool that allows customer inquiries to drive the project origination process. This customer-focused approach is a departure from the traditional frameworks and public sector dominance that have led to a lack of collaboration and community origination. The company's delivery model is also unique in that it includes customer financing solutions that enable owner occupation for those who would rather buy than rent. but have been able to do so due to various reasons. Hamatics aims to provide affordable homes to purchase for Imagineers in London and other UK metropolitan towns and cities, delivering at a budget price point to an acceptable standard with timely delivery while offering a best-in-class value proposition for its customers. The importance of credit creation cannot be overstated when it comes to money into property, and Hermatics' manufacturing and customer financing solution addresses this crucial issue. The company's product is aimed at the reluctant 10%ers, those who would like to own their own home but have been able to do so through traditional means. The crisis in affordable housing has been well known and increasingly acute since the mid-1990s. Provision of suitable housing has traditionally been through a mixture of local authority provision, private landlords, and through home ownership, supported by mortgages, mortgage society home loans, mortgages. With the liberalisation of the UK housing market since the early 1980s and light touch regulation of the finance sector, the financing of and distribution of types of housing has changed considerably. Hermatics' focus on profitability, robust market fundamentals, sets it apart from its competitors. The company's proof of concept has evolved through close study of successful MMC companies and 3 proofs of concept completed by Acom and Rogers Sturk and Partners. The Oxley Wood house morphed into House by Urban Splash, which is now defunct, but the lessons learned from these projects have informed Hermatics' approach. In conclusion, Hermatics is a bespoke solution to a specific problem that aims to revolutionise a new home sales in the affordable and senior sector. Through its innovative approach to MMC and customer financing, Hermatics aims to provide affordable homes for purchase to those who have been able to do so through traditional means. The company's focus on profitability and best-in-class value proposition for its customers sets it apart from its competitors and positions it as a leader in the affordable housing market. The build-to-rent and institutional housing market have been growing in popularity in recent years. This market is a relatively new concept in the UK, but it has gained significant momentum in the last few years. In this blog post, we will discuss the BTR and institutional housing market and provide a report on the current state of the market. What is build-to-rent? Build-to-rent is a housing model where developers build properties specifically for the rental market. The properties are designed to cater to the needs of renters, providing high-quality accommodation with a range of amenities. The BTR model is different from traditional rental properties, where landlords may not have the same level of investment or interest in the property. The BTR model has become increasingly popular due to changes in the property market. More people are choosing to rent rather than buy, and there is a growing demand for high-quality rental properties. Developers have recognized this trend and are investing in BTR properties to meet this demand. What is institutional housing? Institutional housing refers to properties that are owned by institutional investors, such as pension funds, insurance companies, or real estate investment trusts, REITs. These investors are attracted to the stable income streams that rental properties can provide. Institutional investors typically invest in large-scale projects such as apartment blocks or housing estates. The institutional housing market has grown significantly in recent years, with more investors recognizing the potential for rental properties. This has led to an increase in the number of institutional investors entering the market and investing in large-scale projects. Current state of the BTR market. Build-to-rent specialist Ascend Properties has highlighted the significant investment growth potential of the sector. In the year 2015, there was investment of £1 billion. By 2015, the total value of investment was £15,920,000,000. This is predicted to increase to £24,603,871,430 by 2025. According to a recent report by Savills, the BTR and institutional housing market is expected to grow significantly over the next few years. The report predicts that the market could be worth £145 billion by 2025, up from £87 billion in 2019. The report also highlights some of the key drivers behind this growth. These include growing demand for rental properties, changes in the property market, and increased investment from institutional investors. One of the key factors driving growth in the BTR market is the changing attitudes towards renting. More people are choosing to rent rather than buy, and they are looking for quality rental properties that offer a range of amenities. Developers are responding to this demand by building more BTR properties. Institutional investors are also playing a significant role in driving growth in the market. These investors are attracted to the stable income streams that rental properties can provide, and they are investing in large-scale projects to generate these returns. The following table shows the percentage of dwellings accounted for by the private rental sector. Conclusion. The build-to-rent and institutional housing market is a growing sector in the UK property market. The BTR model provides high-quality rental properties that meet the needs of renters, while institutional investors are investing in large-scale projects to generate stable income streams. The market is expected to grow significantly over the next few years, driven by changes in the property market and increased investment from institutional investors. As more developers and investors enter the market, we can expect to see more high-quality rental properties being built, providing renters with more choice and better accommodation. The BTR ideal. The build-to-rent sector in the UK has been experiencing record highs in investment for the fourth consecutive year, according to a report by Savills. However, the sector is not without its challenges, despite increased investor appetite. Build-to-rent strength is yet to be tested outside of large urban environments. This presents planning challenges for investors, developers, and councils who must balance rental demand with housing policy. The introduction of late-stage reviews and secondary staircases could cause significant delays in development timeframes, potentially negating project viability. Investors and consumers are also paying more attention to environmental social governance factors, including the social impact of developments on residents and wider community. The new Homatics dashboard, Fleet Buyer BTR 360, provides an unparalleled opportunity for cross-market data contextualization to address these challenges. The imbalance between supply and demand continues to support and grow the BTR sector, as well as investor support. The BTR market is expected to continue to grow as market indicators, economic trends, and policy changes affect the sector. Investors are attracted to B2R due to factors such as affordability, geography, and single multifamily schemes and mid-market renters. The most common age band for residents in both BTR and private rented sector is 25 to 34 years old, making up 40% of all residents. This presents a significant opportunity to tap into different rental markets from single, multifamily, and mid-market renters. Buildings can provide for older demographics looking to downsize, while single and multifamily schemes need to consider what families are looking for. The resi slowdown is creating a new opportunity for mid-market renters. Cross-market data contextualization. BTR is a critical sector that attracts growing investments and diversifies the UK's housing supply. However, planning policy and regulation can be an enabler or a hindrance to the sector's growth. BTR should be compared to other resi sectors within the planning process, and affordable housing should be integrated within schemes. The impact of late-stage reviews and the Building Safety Act on cost and design should also be considered. The Building Safety Act's second staircase rule for buildings over 30 metres was mandated by the Mayor of London earlier this year. The new rule impacts the viability of schemes and market perception of building safety, which could impact tenancy and rents. Developers must consider how to move forward with existing plans while navigating challenges such as construction costs, supply chain issues, labour shortages, and wider economic uncertainties. PropTech provides a huge opportunity to enhance customer experience through data-driven strategies, and AI data can be used throughout a scheme to enhance resident experience while improving the efficiency and sustainability of the building. Successful BTR schemes require functional living spaces, interior design, communal spaces, and connections to the community. The top-rated BTR properties in England share commonalities such as these. BTR can contribute to the wider climate goals by ensuring reuse and recycle are core to development. Embodied carbon and overall carbon across the lifespan must be calculated while working with residents to optimise energy efficiency and reduce carbon. BTR's role in placemaking involves meeting social value obligations while working with planners to maximise opportunities for integration. Understanding what amenities are valuable to residents and the wider community is also essential. In conclusion, while the BTR sector in the UK is experiencing record highs in investment, it is not without its challenges. Planning challenges, ESG factors, investor appetite, demographics, planning policy and regulation, economic uncertainties, PropTech solutions, successful scheme ingredients, environmental impact and social impact must all be considered for BTR's continued growth and success. Building for Boomers Hermetics document. Where the affordable homes are differentiated or decoupled from the absorption rate for full market value homes, there is no reason not to bring all conditioned affordable housing provision forward to meet existing demand as represented by housing association and local authority waiting lists, and also private sale homes offered at 70% of open market value, for instance. BTR impact. Investor development partnerships likely to rise. For developers, the wider economic context has made partnering with an investor more attractive. Firstly, using forward funding arrangements to access development funding avoids the use of expensive debt to finance projects. Forward funding can make projects viable where debt is no longer accretive. And secondly, the weakening sales market should increase the value of certainty. Multifamily investors can offer developers a guaranteed exit on completion at a price which is agreed before construction begins. The appetite of developers to take on multifamily projects is likely to increase given the security of partnering with an investor and the lack of alternative development opportunities. Multifamily investors should therefore gain access to a wider choice of development partners. Investor-developer partnerships will allow both parties to secure their development pipeline over the next year. Multifamily increasing its shares of construction starts. We can expect multifamily schemes to make up a greater share of housing starts in 2023, given that developers are now looking at alternative exit strategies to maintain sales rates and de-risk their pipelines. Nearly 20,000 multifamily apartments started in the year to Q1 2022 across England. Since 2014 to 15, multifamily has grown its share of permanent dwelling starts from 4.4% to 11.2%, with rental demand forecast to remain more robust than sales demand. We're likely to see this share increase. Build to rent development. The UK's build-to-rent stock now stands at 78,700 completed homes, with a further 50,500 homes under construction. The future pipeline currently stands at 113,400 homes, including those in the pre-application stage. This brings the total size of the sector to 242,500 homes completed or in the potential pipeline. The latest quarter's data shows that BTR delivery has begun to slow down, suggesting multifamily is not immune to the headwinds facing the wider construction sector. Annualized starts have fallen around a quarter during the year to quarter four, albeit this follows a very strong 2021 and mirrors the trend seen in the wider residential development market. There has been a greater decline in completions, meaning the construction pipeline is in a healthy position in both London, 14,700 homes, and the region's 35,750 homes. Equity-rich investors are well placed to mop up any slack in construction capacity during the coming year. Developers' balance sheets are strong, but private for sale development will offer less opportunity to maintain and/or increase output due to falling sales rates. Developers will therefore need to seek other routes to maintain delivery rates, which is likely to include multifamily and single-family rental. At the same time, momentum for single-family rental investment is growing at pace. 2 forward funding agreements were agreed in quarter four 2022 with UK householders. As the sales market slows, we're likely to see more house builders and developers seeking alternative exit strategies, and there will be opportunities for investors remaining active in the market. Major players. The build-to-rent market has emerged as a strong trend in the UK's property market since 2016, attracting some of the biggest players in the industry, despite the challenges posed by the COVID-19 pandemic. The BTR market is expected to remain a lucrative investment opportunity for institutional investors. The BTR market is characterised by purpose-built, private rented residential homes designed specifically for tenants, offering community, social events that make them attractive to millennials. However, the pandemic has severely hampered this aspect of the BTR market, causing concern amongst investors. Despite this setback, the BTR market remains a low-risk investment opportunity for institutional investors. According to the latest British Property Federation build-to-rent map of the UK, there are now 157,000 BTR homes in the UK, either complete, under construction, or in planning. Of these, 43,236 are complete, 33,506 are under construction, and 80,771 are in the planning stages. London is a major hotspot for BTR developments, with a total of 74,892 units. Outside the capital, Salford and Manchester are other hotspots for BTR developments. While the number of schemes in the Midlands is growing fast, there aren't many major UK cities without a scheme already complete, under construction, or in planning. The BTR market has attracted institutional developers and BTR managers, landlords who collaborate to bring a scheme to operational fruition. Notable players in the BTR market include Legal & General, Quintain, Greystar, Goldman Sachs, and M&G. Legal & General has invested considerable sums since 2016 and established a £1.7 billion BTR portfolio with over 4,500 existing homes and further investment in the pipeline. Quintain is a strategic partner with Apache Capital and Criterion Capital to develop and operate a leading premium BTR portfolio located in prime sites across UK regional cities with a pipeline of approximately 5,000 units. Greystar aims to deliver 10,000 BTR units in London by 2022. Goldman Sachs made its first foray into BTR in April 2019 when it bankrolled a £184 million skyscraper that is expected to be the largest residential tower in Birmingham. M&G established a UK residential property fund, offering institutional investors access to Britain's growing residential property sector, with a focus of generating income from purpose-built, professionally managed accommodation blocks. The BTR market is not without its challenges. The COVID-19 pandemic had posed significant challenges for the sector, particularly with regards to community social events. However, developers and investors will need to adapt to the post-COVID-19 world by creating contactless and social distancing friendly BTR schemes that meets the needs of today's tenants. Looking ahead, the BTR market is expected to continue its boom rather than bust. The pandemic has highlighted the importance of high quality rental accommodation that meets the needs of tenants. As such, developers and investors will need to focus on creating innovative and sustainable BTR schemes that offer a safe and comfortable living environment for tenants. Contractors, house builders, and modern methods, volumetric versus DFMA panelised site assembly. The UK housing market has undergone significant changes in recent years, driven by a range of policy initiatives and market forces. These changes have been aimed at increasing the supply of new homes, improving the quality of housing stock, and making homes more affordable for buyers and renters alike. One of the key trends in the market has been the rise of modern methods of construction. This method of construction is seen as a way to improve build quality, reduce costs and environmental impact, and speed up the delivery of new homes. According to a recent report by CAST, real estate and construction consultancy, 27% of developers plan to build at least half their homes using MMC. To support the growth of MMC, the government has introduced a range of policies and initiatives. The Future Homes Standard will require all new homes to produce 75 to 80% less carbon emissions than homes built under current regulations. The government has also introduced nutrient neutrality requirements to address water pollution caused by agricultural practices and inadequate wastewater treatment. Another important development in the market has been the rise of self-build and custom homes. The government is committed to increasing the number of self-built custom home plots nationally and establishing it as a mainstream option for people to get on the housing ladder. According to a recent report by the Building Societies Association, self and custom build completions currently account for roughly 13,000 homes per year. To support the growth of SPCH, the government has introduced a range of initiatives including permissive planning policies and targeted percentage policies requiring large sites to include SPCH homes. These initiatives have already had an impact, with hundreds of new sites coming to market. The growth of MMC and SPCH has been supported by investment from institutional investors such as Aviva Capital Partners and Goldman Sachs. Aviva recently invested £20 million into Top Hat, a business manufacturing low-carbon modular homes using MMC. The investment will support Top Hat's major new factory in Corby, which will be capable of manufacturing 4,000 ultra-low carbon homes a year and will be Europe's largest modular housing factory. Persimmon Homes has also invested in Top Hat with the aim of embracing manufacturing techniques used by Top Hat to complement its existing Space4 timber frame product. This investment will drive further build efficiencies while expanding its product offering to customers and support moves to meet the Future Home Standard. The rise of MMC and SPCH represents an important shift in the housing market. These developments have the potential to improve build quality, reduce costs and environmental impact, and speed up the delivery of new homes, with support from institutional investors and government policy initiatives. These trends are likely to continue shaping the market for years to come. As the UK continues to face a housing shortage, it is crucial that innovative solutions like MMC and SPCH are embraced to meet the demand for affordable, high-quality housing. BlackRock and megatrends, financialisation, BTR, and the finance, insurance, and real estate sector. The housing market is a complex, multifaceted industry that is influenced by a variety of factors, including digital disruption, geopolitical shifts, and the transition to a low-carbon economy. In order to navigate this landscape successfully, it is important to take a granular approach to investing and to identify the sectors and companies that are poised to benefit from these mega forces. One area that may see gains in the coming years is private credit, as traditional banks face pressure and credit conditions tighten. Additionally, artificial intelligence is a megaforce that should be considered when making investment decisions. A granular approach can help achieve portfolio breadth and identifying promising areas to explore, such as Japanese equities with DM stocks and EM equities and local EM bonds. However, the housing market is not without its challenges. The collapse of companies like Katerra highlights the need for sustainable financial models and careful consideration of connections to other companies. The affordable housing crisis is another issue that must be addressed with a focus on demand planning, building a solid sales pipeline, and prioritizing customer-led projects. The financializing of housing production has led to a shift in priorities for major house builders, from building more homes to maximizing profits for shareholders. Share buybacks, dividend payments, and land speculation are common practices that contribute to the unaffordability of housing in the UK. Policy interventions are needed to address the negative effects of financialisation on housing production. Rental housing financialisation also has implications for housing shortages, prices, and volatility. While it may have a minimal impact on the market for sold homes in the short term, it could fuel more demand for rental property over longer time horizons. However, it may not benefit renters who lack both human and physical capital. The recent merger of Countryside Partnerships and Vistry has formed the biggest partnership housing firm in the UK, with a focus on delivering over 15,000 homes a year. This merger could have a significant impact on the housing market. However, it is important to ensure that sustainable finance models are prioritised in order to avoid negative effects on affordability. In addition, banks like Lloyds are launching initiatives like Citra Living to satisfy growing demand for private rented housing. While some believe this move is motivated by a need to diversify sources of income, others see it as an opportunity to address the affordable housing crisis. Key takeaways and the British Property Federation role in all things BTR. The current state of the housing industry is undergoing a significant shift, and various players investing in volumetric and modular construction methods. Aviva and Persimmon have both invested in Top Hat, while Goldman Sachs has purchased Gatehouse's first build-to-rent portfolio. Legal and General with Watkins Jones at Titanic Quay Belfast is also making significant strides in this area. However, it is important to note that failures in volumetric construction have occurred in the past, such as with Katerra, Legal and General Modular, House by Urban Splash, and Ilkley Homes. While Homes England invested in Ilkley and Urban Splash, it is crucial to consider the potential risks associated with this type of construction. In response to the current trends in the housing industry, strategic alliances are being formed to address urbanisation megatrends. BlackRock is forecasting and acting upon these trends, while Allsops and JLL are key players in the owner-occupier sales outlet-based model. Knight Frank and Savills are more developer, house builder, and owner-occupier focused. Contractors and subcontractors are also shifting their emphasis across the distribution supply chain, as well as the origination and construction supply chain. To improve the delivery of projects across the private sector, the British Property Federation has published the Trust and Productivity Playbook, building on the work of the Public Sector Construction Playbook. This playbook suggests new strategies to improve productivity and maximise economic, environmental and social value. It also reflects the less formal and prescriptive approach that can be adopted in the private sector as opposed to the public sector, including negotiating contracts in trust-based relationships that can develop between clients and their consultants and contractors. However, it is important to note that using frameworks inappropriately can have negative consequences for contracting authorities, markets, and supplies, and can unintentionally inflate prices. The recent construction playbook highlights this risk and suggests that frameworks should be used efficiently and appropriately and not overstated in forward sales pipelines, as both Ilkley and LNG Modular appear to have done. In conclusion, while volumetric and modular construction methods are gaining traction in the housing industry, it is crucial to consider potential risks associated with these methods. Strategic alliances are being formed to address urbanisation megatrends, and the government has published the Trust and Productivity Playbook to improve productivity and maximise economic, environmental, and social value. However, frameworks should be used appropriately to avoid negative consequences for all parties involved. BTR map of the UK. Figures from the British Property Federation. There are now 251,208 build-to-rent homes in the UK, including both London and the Regents, and which 78,717 are complete, 72,244 under construction, and 113,379 in planning. In London, there's a total of 96,184 units, and outside London, there are 155 and 24 units.